Okay, welcome to the Swing Trading of Cycles channel. It is December 16th. It's the week of having the FOMC meeting behind us and the CPI print. And so a very important weekly candle that's closing out right now. We're going to look at the broader market today. And what I'll say is whatever particular asset you prefer, whether it's uranium or gold, precious metals, what have you, what the broader market is doing is going to really impact a lot. So it's important to have a sense of that for sure. And we're going to focus on just the S&P 500 today. We'll also look at an inverse ETF that might give us some additional clues as to where we're going. So looking at the S&P 500, we'll start on the daily chart. And so the notion here is that, and this is an important, let's think of this, some nuance here. This could have been a daily cycle low here, right? Something a little bit shallow, right? And this could be the meanderings of a new daily cycle. And so the very bearish interpretation here is that this thing here is actually a new daily cycle that has topped out super early. That, again, that's not my favorite interpretation, and we're going to have to see as we get more price action. What we're assuming here, though, is that, December 13th was a daily cycle high. That was day 42. It's very bearish, and we'll look at it on the weekly chart because it shows up there even more clearly that this is a double top situation, right? Now, to be clear, this is a higher high than this, but only slightly, like ever so slightly. So it's essentially a double top, right? And since then, we've just come slamming down. And it's not often that you know exactly why things have reversed. In this case, it's because of the FOMC. Inflation looked okay, but, the Fed just wasn't. The Fed was still incredibly hawkish. And to some degree, it's almost too obvious that the market is going to sell off because the Fed is hawkish, since, everyone who's been paying attention knows they've been hawkish. But that's where we stand. So it's Friday. It's about 3:50, so the candle's going to close in 10 minutes. So it shouldn't change a ton. That said, what's changed over, I'd say, the last hour, and we'll zoom into we'll look at this is the S&P futures, so not SPX cash, but just to give you a sense. So this middle chart here is the hourly, and you can see in the last 3 hours we've had green candles, right? So this is your candle for what time period? Right, so this is your candle for the 10 a.m. time period, and we just kind of went down from there. And we've been trying to rebound, basically. We're now building an upper wick, and that's because of this attempted reversal on the 15-minute. But this rebound is likely to become a lower high, just like this rebound was a lower high, and this little consolidation, this little consolidation, this little consolidation. I mean, lower highs are consolidations in a downtrend. And so that's what this lower wick is. Now, it's possible that this is our daily cycle low, right? That, again, controversial, but potentially maybe this was our daily cycle low. In some ways, it doesn't really matter. But the point is, even if that is the case, what is this set up for the weekly? Now, this is the most important. I mean, look at this weekly candle. It's hard to imagine how, I was saying it's hard to imagine how this candle could be more bearish. Now, the way it could be more bearish is by closing on the lows, and we're not closing on the lows now because we're getting this little rebound. Literally, the way I think about it is we're literally getting this rebound literally in the last 3 hours of the week, right? We just looked at that chart, right? In the last 3 hourly candles have been green and been trying to make higher and been making higher highs. But look at this massive candle, which makes a higher high above last week. So we poked up, and this was green at one point, this candle. And then we just came down and failed. We rallied off the CPI and then just kind of gave it all back. And that was Tuesday morning, right? And then gave it all back and then some. Then went red, went red, gave it all back. And then now we've made a lower low. So this is a bearish outside candle, right? Because it makes a higher high and a higher low. And these tend to be followed by more downside. Now we may get some consolidation first, but eventually, and I'm who knows, maybe we do get a massive reversal and the candle turns green. But the idea, though, is that We have just started the daily cycle decline, and it's a really ironic, and it's not, it's ironic, just a coincidence, not like some kind of specific thing. Notice the last weekly cycle actually topped out on week 9 as well, right? That's what these numbers mean at the top. This weekly cycle was really short, topped out on week 5. This one topped out on week 13. So that would be really, really ironic that this topped out on week 9. And also notice this is a double top, right? So you can kind of say it kind of topped out on week 7. We had this little decline. We tried to rally back and then kind of failed. We poked our head above it. And think about how long weekly cycles tend to last, right? I mean, we can see we've had some short ones here. 17 and 16 weeks are actually pretty short for weekly cycles because they tend to be more like 20, 30. So let's say we have another short one, right? Let's say it's going to be 16 weeks, right? Like this one before that. That would put our low. And keep in mind that whether or not this is the weekly cycle high, this would still be when we would expect a low if we're going to get a 16-week cycle, if that makes sense. So either way, we're talking about a low on around January 30th, like the last week of January. So it's really now a question of, are we going to do something like this, which is my base case, right? And the level is not specific. I think we probably break this level actually. But are we going to do something like that? Or are we going to do something like this? Somehow, are we going to somehow miraculously recover from this and then finally make our weekly cycle low? Because either way, right, that's an important way to think about it. Either way, we're going to drop into a weekly cycle low at some point. So it's really just a question of, is this the high and the downtrend has started, or is the high ahead of us and then we're going to get a downtrend, but it's going to be from a higher level? How likely, like think about these two scenarios, and I'm saying it's 16 weeks, who knows, right? It could be longer, it could be even shorter, right? It could be something like that, right? But like which of these scenarios seems more likely, right? That like we continue on a downtrend, or we somehow like miraculously, and we'll think about the levels specifically, right? Like now, next week, we're gonna best case scenario, we're gonna open as an inside week, right? That's because we just built this little lower wick here, and we obviously have this upper wick. So we're not gonna open as a new high, right? We made a high of 4,100 this week. We're not gonna open above 4,100, and actually, it's certainly possible that we open below the low. The low is 38.27, but so that's my point. Best case scenario is we open inside this range, and then it would have to work its way back up, right? You essentially start price discovery again to some degree. I suspect what happens is we open inside this range, we consolidate a bit because we're already rebounding here a little bit. We consolidate a little bit, hence this little up thing, and then we move lower. And that's where the daily cycle low comes in, and that's important to understand how those factor in together. Because if we're expecting a daily cycle low soon, that means we're going to get a little bounce and then we're going to get a decline. So let's just pretend that today is our daily cycle low. And then let's say we're going to get another daily cycle that's kind of short. It's 25 days in that neighborhood, right? Like let's just ballpark. So where would that take us in time, right? Right now we're triangulating the daily and weekly cycles. Well, what do you know, right? That takes us to the week of January 24th. And we just talked about how if we were going to get a 16-week cycle, that would take us to the week of January 30th, right? So what if this is, instead of a 25-day cycle, it's like a, 30-day cycle, something like that, 29-day cycle. That does take us to that 16-week weekly cycle. Because 16 weeks is really short, right? So, it'd be kind of surprising to get another weekly cycle that's even shorter than the norm, even though we've already, and especially as we've been getting short weekly cycles. But now you're starting to think, okay, we maybe get a daily cycle lows like next week if today wasn't it, and then we get some kind of feeble bounce. That's why this is important. You don't just go shorting in the hole, right? Then we watch for it, right? Like, are we going to get some kind of feeble bounce and then start a downtrend that moves us into a daily cycle low, which is also our weekly cycle low? Because that's how it works. Every weekly cycle low is also a daily cycle low. So that's going to be important, and we would expect that the top would come kind of early. I mean, this was a really early top on on day 4, right? This was a more moderate top on day 14. I mean, this was actually right translated, although it was a failed daily cycle. So that's what we're going to be watching for. And then this is your opportunity to short. Like when you see the break here that creates a swing high, that's going to be a juicy one. And if we think about the monthly chart, the pattern that's showing up here, and we probably don't complete this for this month because we're running out of time. But the same way we made a bearish outside weekly candle, we're on pace to make a bearish outside monthly candle because we made a new high above this candle, and now we're on pace to make a new low. So this candle's low is 3,700. That's the November candle. Now, if we don't get there in November or this in January, it's totally possible that we finish the job in January, right? So we end up getting some kind of a compound outside candle. And I had tweeted about this, like how far down we are from there. So now it's only about 3.5% down. So not even that much more of a decline. So maybe that's actually where we get our daily cycle low if we haven't gotten it already. But that's important. That's a pretty actionable level. Like generally these patterns play out, and we're already through 50%, like the sort of 50% retracement of this range. So that increases the odds that we're going to fall out of the other side. Again, doesn't have to happen in December. Could end up happening in January to kind of complete the deal. And let's look at the quarterly chart. So you can see this quarterly chart, it looks a lot like the weekly chart, doesn't it? With that big upper wick, red body. And that's for the whole quarter of Q3. This is our Q4 candle, and this is what's happening to it, right? Now, depending on how we close out in the next couple of weeks to finish the month, that'll tell us how this candle closes, and will set us up for the Q1 2022 candle, which is probably going to be inside the range of this candle. Worst case scenario, though, notice the low of this candle is 34.91. That would be a doomsday scenario. Or excuse me, what's the open of this candle? So the open is 36.09. So if we fall below the open, this candle goes red. So that's the other thing to sort of watch for. That would be around the 3,600 level. And that would be quite a thing to have a fourth quarter in a row close red, because we had 3 quarters in a row close red. But also the case that having this little green quarter could essentially be, your little higher low, lower high, right? Like that's like your because price can't drop in a straight line forever, and so it wouldn't be crazy to see that like we get this little lower high and then we get another big move lower for the Q1 2023 candle, even if we do end up getting a reversal, let's say by late March, that sort of thing. So that's the big picture that you want to watch for. And I mentioned that we have the inverse ETF. I want to look at SQQQ. I tweeted about this. You can think about the weekly cycles here, and so this is like, and you have to kind of like zoom in here. These are just trading vehicles. Definitely, you don't want to be parking money in these things. They're in very long-term downtrends, these inverse ETFs. But you can see it's been working. This is going back to like, what is that? February 2021, right? Like that was your big sell-off that you had in the market. And so you had a few weeks. And the thing I'll point out here is that the cycles for these inverse ETFs are not exactly the mirror of the cycles for, let's say, the QQQ in this case. Because the way this works is this thing has a rally during the declining phase of the QQQ cycle. And so that's why these tend to be short. So this was just a 2-week rally. This was just a little 2-week rally. This was only a 4-week rally. And then as we get into the downtrend that we've been having, we start to get longer rallies. So that's an 8-week rally. This was an 11-week rally. And this cycle that I suspect just ended was an 8-week rally. This would be our low this week on week 17. And if we're starting a new weekly cycle, imagine we have another 8-week rally. You start to see the pattern, right? If we rally in the inverse ETF for 8 weeks, that means we'd have an 8-week decline in the Qs, which will probably mirror the SPY. Now, there's no reason we have to rally for 8 weeks. We could rally for way shorter. Again, you can see we can have really short, and it all depends on the decline. We just talked about how we could probably decline for another 6 or 7 weeks easily for the S&P. So it all kind of makes sense. So maybe this is an 8-week top. Maybe it actually happens, more like week 6 or 7. Either way, this is going to be an interesting, just like additional data point to I'm going to be keeping an eye on, seeing how this kind of shapes up. But just notice how bullish this big green bullish outside candle is. The exact inverse of what we're seeing with the Qs, which is what you would get, you expect. That's the whole point. It's an inverse ETF. But it'll be interesting to see, because you imagine this is just the first week, so it's gotta rally at least a few weeks, which would imply a few weeks of being down, at the very least, right? If not, a nice little rally coming for this thing, which means a nice little decline coming from the markets, which kind of looks like the base case. We're going to have to see next week how that consolidation shapes up, but that we could have a massive short opportunity on our hands. So I'll leave it at that. We'll definitely be giving more updates here and providing real time as possible on Twitter. So definitely follow on Twitter if you're not. You can look for a link in the description down there. But I'll leave it at that. Thanks for watching today.